Hello, a nice evening today on Sundays. Yeah, let's start. It's already 3 to 4 minutes after starting. So, if you have any questions on this home loan, particularly like if you want to understand more about repo rates, how does it impacts your home loan, interest rates, how long, what is the ideal tenure for you, how can you plan your home loan EMIs, whether to go with 15 years, whether to go with 20, 25, 30 years, any of such questions if you have, please put on this comment box. Let me know your questions there. So I will answer you upon my experience, upon my strategies, upon the what my clients had issues with, or how did they tackle it, what are the strategies they are implementing, what are they following it. So that's what we can do. Yeah. So anybody has any questions on this? Please, please come up, start with your questions. Let's talk about it. Any of the questions? Yeah, 67% of people are home loan buyers. 33% people are no, saying no. Maybe they have paid off their home loan or maybe planning to take a home loan in future. Yeah. How to, Sridhar Shetty asking how to, I do not know what. Yeah. So yes, please ask me. Like, let's go ahead with the questions and answers now. So if you have any questions about home loan, we can start taking right away. So I'll tell you something about repo rates. Okay, repo rate is a rate what RBI gives money to the banks. So upon that rate, there will be some margin given by the banks. Upon that, the interest rate is fixed on our loan, consumer loan. Okay, so whenever RBI lowers the repo rate or it increases the repo rate, it will affect our home loan interest as well, right? So at that case, if a small percentage comes down for a 30-year home loan tenure, like 0.25% for a 50 lakh rupees home loan, it will decrease your liability on interest by almost maybe by 4 to 8 lakh rupees in a total tenure of 30 years. So home loan buyers always go with a floating rate. Fixed rates are very rare right now. Floating rate is what is going on. So when the RBI comes down, like brings down the repo rates, that will definitely help you. It may help you in a like reduction of your current burden in interest rates, and it will help you reduce your EMI as well. Maybe like if you are good enough to pay the like interest rates, I mean EMIs on time, then it is better to go continue with that, so that you will be like your tenure in a long term will be less. Okay. So one question is that how to decide on your tenure, fixed or floating rate, which is best? Please explain. Yeah. See, fixed is almost non-existent nowadays in home loans. Floating rate is what is going on in all the banks. Floating rates are very good, like in only sense that when the interest rates are peaked out, when RBI increases the repo rates, like when inflation is high, they want to reduce this consumer spending. So which is why like they increase the repo rates. When they increase, your home loan rates are increased as well. So it may go up to 9, 9.5, 10, 10.5 for some people. Okay, and that is the point where you are paying the maximum of the interest. So when the repo rates are decreased, your EMI burden, like it will automatically reflect in your account, and your like monthly contribution to principal amount increases. It will definitely not immediately decrease your EMI amount. You need to go to the bank and put a request that to reduce your home loan EMI. Okay, when you go and ask them, then only they will reduce your EMI. or increase the tenure or decrease the tenure. Otherwise they will not do. Repo rates will definitely decrease or increase your like interest outgo, or like increase your principal amount reduction. So since the RBI has decreased all by like almost by 1% right now, the contribution what you're making in EMI, okay, like let's say you're paying 25,000 rupees EMI per month. So previously, let's say it was almost 22,000 going to interest rate and 2,000 going to principal amount. Maybe now 2,500 is going to your principal amount. The principal amount is reducing, and that reduction will definitely help you in long run. So your interest outgo, it will be definitely low. Will personal interest rate affect, or is it fixed? Personal interest personal loans are almost fixed, so it will not reduce, which is why they keep like you like penalties even if you pay it earlier. Like they will not let you pay within 1 year. One thing. Second thing is that even if you start paying in the second year, they will charge you some 3 to 4% of the principal amount, or the amount what you are going to pay. So personal loans are always fixed. It is not floating. It will not increase, it will not decrease. So it is fixed. uh, no, like you can ask any of the things, but home loan is a major topic. Many people are like concerned with many of the questions what I get regarding home loan itself. So you can ask any home loan, like any loan questions, no issues. Personal loan interest rate effect. Yeah, okay. I have taken 30 years. Yeah, 30 years is good. Like taking into consideration that 30 years is a very long tenure. Some people get stressed in that situation, thinking that I am too much loaded for 30 years. But it is not a problem actually. It will help you improve your cash flows. Cash flows in the sense, when you know that this is the amount you are going to pay for next 30 years, you know how to manage your money. But if you decrease your tenure and you start to pay more in home loan EMIs, you are reducing your cash flow. You are not having adequate amount with you, money with you, to do some other things with your money. So having a longer tenure will definitely help you in initial days, and as you move on, these fluctuation in repo rates will definitely help you as well. Please focus on your cash flows first before putting everything into your home loan EMIs. Okay. Yeah, you can talk about mutual funds also, no issues. Okay, I will take questions on mutual funds also, no problem. Okay, so continuing with that, what happens is that when you take home loan tenure or home loan EMI, you know the maximum outgo. For example, if you are taking 10 lakhs loan, you are almost paying 20 lakhs as interest rate. So beyond that, you are not paying. Some here and there, like little up and downs will be there. But when you know that your cash flow is great, you will definitely have much more power with you. Like whenever you have more money with you, that is more powerful. You are more powerful. Okay. So for those people who are very conscious about this loan burden and having a debt free life, then those people must concentrate on paying their loans first, than like creating a wealth for themselves. So those people who are like okay with paying the home loans or EMIs continuously until and unless like they are into like they are getting some big money out of somewhere and they want to pay, then definitely they can pay. Okay. So if you have any other questions, definitely please ask to me. Let's talk about it. Let's clarify many of your doubts, and let's take this into a like very informative session. You can understand. You can have a very good like understanding on that, and you can take a very informed decision. Yeah, like yes. If you have any questions in mutual funds, also, yeah, please ask it. No problem. Let's make this time very useful in any of the questions. No issues. Yeah, 56 percentage now, like 56 percentage of people are not having a home loan. That's good. I hope you are going to get a home loan soon. If you have a dream of buying a home, definitely go with a home loan. Okay, because home loan interest rates are dirt cheap right now. They are starting at 7.5 percentage for those who are very excellent in their credit scores. They will be getting at 7.5 or 7.6. That's a very good, like even EPF, your EPF is paying 8.25 as interest, and your home loans are at 7.5, 7.6. So think about it. It's really a great time to take the home loan and make your dream come true. If you can suggest two mutual funds for a newborn for their future financial goals, Future financial goals, if your like tenure is very long, definitely go with equities. Okay, I cannot specifically tell you the names of the funds, but you can definitely go with equity funds with longer term tenure, with like having some 12 to 15% as expectation. But if you want to take leverage of this gold and other assets, go with multi-asset funds. Since like you're talking about newborn, I definitely feel that you definitely will have a very long time, right? So go with the equity funds or multi-asset funds. Even aggressive hybrid funds also fine. Okay, they definitely give you some 12 to some approximately that. You do not have to take much risk on that. You have 15 to 20 years, definitely you can definitely do very good on that. Is loan provided for buying site? Because buying flat will lock cash flows and land investment is better. Both are locking your cash flows. Okay, some private banks are giving loans, but there is no specific things stating that unless until it is a commercial land having potential for things, some private banks do give loans. But there also like there is a lock in, like your cash will be locked in. But if you are confident of like encashing it and making a good turnover out of it, like either you rent it for something, for some like functions or something, or if you are giving it for a lease for a longer term, definitely that will generate you cash flows. And home loans as well, like when you have something renting or something, definitely if it is giving you somewhere around 8% to 10% in yield, or at least 6 to 8% in yield, then that is also a good investment. Like considering that you have a tangible asset in front of you, and you have a like appreciating asset as well, a land or like home or something, definitely you can go with that. How about value and momentum funds? Can you please tell us more about these specific funds? Yeah. See, value funds are good. Value funds are focused on contra theory in the sense if the market is doing well, but some of the sector, like sector or some specific stocks in that particular sector is not doing good despite their results being good or something, people are not having interest on that particular stock. These value funds focus on those funds and those stocks and take some leverage of this. Leverage in the sense they are riskier bet for them, because when the stock is not performing well, even though market is doing well, they do not perform, they may slide little more. But if they make a turnaround, like for example, the best example I can give you right now is SBI cards. SBI cards did not do anything in last 3 to 4 years. Okay, it was down to 750, 680, 660 as well. But as the like in last 3 to 4 months since December, that particular stock has done exceptionally well, almost 30% it has risen up in 3 to 4 months. So this is contra bet, this is value bet. Now, to make you understand, I gave you the example of SBI cards. It's not a recommendation anyway. So value funds will definitely help you in that, but do not expose yourself too much in value sectors, value funds or something, because it may not work for 2 to 3 years in a stretch, and then it may start working. So yeah, limit your exposure to 10 to 15%. Even momentum, what you said, like momentum funds as well. Momentum funds are like two-edged sword. Once it momentum is upwards, it goes like rocket. When it is down, it will sink like a ship. Okay, so have a like to give a booster to your overall portfolio, you can limit some 10 to 15 percentage to these funds. Definitely you can do, but do not put everything into momentum and value. That's not a like ideal thing to do. Okay, what is the opportunity cost of prepaying home loan versus investing that money? Okay, yeah, this is very good question, I appreciate that. Opportunity cost. See, it's completely dependent on the perspective of a person. Like, if that person is taking opportunity in the sense like having liquid cash with you or an investment is always an opportunity. If you have liquid investments with you, like in mutual funds, stocks, gold, or something like other liquid funds, then definitely that will help you to leverage any of the opportunity, any of the investment opportunity. Okay, be it buying a like quick buying a land and selling, like if you know somewhere like there is a great opportunity buying a land and selling it immediately to somebody else within a period of 3 to 4 for 6 months, and you can make 10-15 percentage or 20-25 percentage out of it. Liquid cash or some investments will definitely help you. So which is why having more cash with you makes you more powerful. Okay, like mutual funds give you that, because you can place an a redemption order immediately within 3 to 4 days, you will get that money. Okay, and if you take opportunity as a thing, sometimes the interest rates might be very high, but if you have some cash which is doing nothing, then it is better to pay off the loan. Taking debt free thing into your mind, and taking being a debt free life is also a great thing, right? But as an investor, as a wealth creation mindset, always investing as much as possible while you service your EMIs in a proper way is the best strategy to do. Because after 10 to 15 years, if you are investing right amount of money without prepaying your loans, you will be having much bigger money than what you have saved. Okay, after 10 to 15 years, you will be having big corpus which you can immediately pay off your loan and have some 30 to 40% extra with you. Okay, that calculation tells us that theoretically and most practically we have proven it. Okay, so like if you have more like you want to detailed thing, you can definitely contact me. We can talk hours on that particular topic. Amit has one more question. If one have home loan for 20 years and decide to pay off to come out of liability towards bank, then what is the earliest duration number of years one should think of early repayment and closing of the loan? Okay, I will tell you the calculation, like normal basic calculation what I did, and tell this to all my clients when they have this question. Okay, see, when you take a home loan, the maximum burden what you are going to take is initial 5 to 7 years. This is where you are almost paying 50%, more than 50% of interest to the bank. Okay, if you are capable of paying off your loans within 5 years, then that is the best thing you can do. In worst case 7 years. But if it is beyond 9 years or 10 years or 12 years, then do not do that. Best thing is that you start investing that like extra amount what you are thinking to pay off, because in the initial 10 years you are already paid 60% to 70% percentage of interest. There is nothing else to save. Okay, you are only prepaying the principal amount. Okay, and at the same time you have taken this inflation against you. So it is not an ideal thing to pay after 10 years or after 7 years. If you can pay it off immediately within 5 years, have that plan, have that strategy and pay it off. You will save at least 50 to 60% of interest outgo. Okay, like for example 50 to 60% in what I am saying is that if 10 lakh is the loan, you will save 10 lakh rupees as interest approximately. Okay, but beyond 10 years, I think it is better to go with your like scheduled or pre-decided EMI and service it accordingly, slow by slow. So that will be very helpful. Better to go with own home or stay in rent with respect to finance. It is always better to own a home, because see, we can talk about so many theoretical things here, but I will tell you some scenarios. Just try to understand that. Scenario one is that owning a home right now. Okay, let's say somebody is having X amount of home loan. Okay, they will start paying it. Okay, every year they will, let's say they will pay it easily. Okay, every EMI is paid easily, or whatever it is, they are going to service it. But if you are staying in a home like with rent, okay, let's say 25,000 as rent or 10,000, whatever the amount of the rent, every year that rent is going to increase. By the time of 10th year, that rent will be equal to your EMI. But your EMI is constant, it is not going to increase unless repo rates are increased. Okay, only factor which will increase your EMI is repo rates, right? But there is no limits for your rent increment. If you are in an area which is developing in a very fast rate, then you are going to pay heavily in the rents. And same time, if you plan to buy a home at that particular point of time, the rates what you are going to buy home will be 2x or 3x. Okay, so it is always better to lock in your home or like apartment or flat or independent house right now and get the possession. Okay, so you will have an idea of how much EMI you are going to pay in a long run. You are already planned after 10 years you are squaring off with your rental things, and after 10 years you are making profits actually, because you are not going to pay any rents, right? The EMI is equal to rent, and going forward your rent is going to further increase, right? So which is why it is always better. Same time, the value of your home will also be get 2x 3x in long run. So for those people who want a home in that particular area, they know that they are not going to change the place, they know that this is the where they are going to have their, like, live their entire life, better go with the home loan, I mean home, okay, own home, than renting, because rent is never ending process. You, like, as and when it increases, you will have to pay. Okay, I think, like, do you want more explanation, or do you have any other doubts in this? Please ask me in this. Amit ji, like, is it okay with that particular thing? Like, you asked me, like, what is the ideal years to pay it off? I told you it is better to pay off within 5 years. If you can pay it off by 3 years, then well and good. Only 35 to 40% is the interest outgo you are going to take. Otherwise it will be like, as the tenure increases, you will be paying more. Okay, yeah, okay. So yeah, to answer that question, that own home or rent, I prefer own home, because you have a lot of luxury. You are living with some others money, actually not your own money. You are paying only maximum of 20 to 30% as down payment. What all enjoyment you do in your own home is from using some others money, and you are paying very pennies, like in peanuts. 7.5% is very less compared to any of the other like safe interest, I mean safe return giving in investments like EPF or PPF. Even PPF is giving 7.1%. Is there any tool or guidance to assess the right price to pursue? No. Like, it's very difficult to say, because every home or every asset is valued in different places in a different way. They take like demand and supply as thing, and they take their reputation as well, because some builders are charging you premium because of their reputation. Okay, some builders are charging you a discount. Maybe that place, they are overburdened, they need to, like, liquidate their assets, so many things. So there is no something like that, but you can definitely make note of, like, multiple, like in your area, if you're looking at 10 to 15 house, you can make a thing of this, and you can see, like, what is near to, like, is railway station very near to you, is hospitals near to that house, and how are they evaluating. You can ask their previous buyers price, if they are disclosing you, then you can have a brief thing, and you are always going to pay premium, like when you're buying a new home. Okay, so I think, like, that is the only metrics. There is no tool or something like that. And one thing what you can do is that you can check the government valuation of that particular site or home, and there are independent evaluators. Okay, those who work for banks before you get a loan, you can approach them for a small fee. Maybe they will charge you, like, depends on the place and zone, charge you 3 to 5k. They will evaluate the valuation of that particular property, okay, as per governments and as per the valuation right now in the, like, market. So they will give you an idea, so you can make some plus or minus 10% and make a offer to them. So you can do that as well. Okay, so okay, now there is one more question. I mean, instead of paying EMI, pay half of it as investment. After 15 years, will have good corpus to continue staying in rent. uh, so I'll read it again to understand. Like, paying, instead of paying EMI, pay half of it as investments, and 15 years will have good corpus to continue staying in the rent. Okay, so yeah, what you said is right, but like, how will you decide that what will be your EMI? You should have a plan. You should have a plan. Like, let's say I will buy a home of 50,000. If it is a sorry 50 lakhs. If it is a 50 lakh home, then I will be approximately taking 35 lakhs as home loan. If 35 lakhs is the home loan for 30 years tenure, it will be approximately 27 to 30,000 as EMI. And then you have to reduce your EMI with your rent. You must see that if your rent is 15k, you are saving 15k. Then you should think that, okay, I will invest 15k for next 15 years, then I will buy. So if you go with this and you see the rate after 15 years, if you predict that 3x of the current cost at least, then you should manage. You should see, like, is it a right thing to do? 15k invested for next 15 years, will it at least come near to that 3x of the cost of buying a new home after 15 years? If it is exceeding that, overperforming that cost, then definitely go with that. Okay, if it is not going with that, then it is better to go with the home right now, right? You are paying EMI for a constant period of time at constant value, right? And when you are paying EMI for a longer period of time, you have a very good cash flow with you. You understand? Then you move on. So it is better to make a right calculation, understand your finances, cash flows, then you decide whether to take it after 15 years. Okay. Even if you take a home loan right now, you can definitely do the same strategy to save that cost for 15 years. Okay. You can have the strategy that way as well. Okay. So there is one more question from Sharanya. How can I plan for loan protection if I face a job loss or income break? And it says, yeah. See, you can include your EMI in your emergency fund because emergency fund is not only taken care of your expenses. If you smartly include your EMIs in your emergency funds, definitely it will cover you up. For example, for some person, if 50K is the monthly expenditure and he has some 15K as EMIs, he should invest that 15K as well. He should consider that 15K EMI as well for his emergency fund construction. So like at least 6 months or 1 year, when you have a emergency fund for that time, you can definitely service your EMIs very easily. You do not have additional stress. You can just focus on getting another job. Do not have to stress out. Even if like it takes 6 months, you have 1 year of emergency funds with you. You can easily service it. Okay. Then one more thing is that you can always approach to the bank. When you have a very good track record of paying the EMIs, you can approach to the bank. You will have some expenses upon that while restructuring your home loans. They will definitely restructure your home loan. When they will restructure it, they may extend the tenure or they may give you some relaxation for a certain period of time. It completely depends on the bank and their team. Okay, but you can always have that option. Okay. So yeah, that one thing you can do. Like I think I have answered that question to you. Like if you have any more doubts on that, please ask me on that. And Blitz YouTube, you also, like I think I have answered you. If you have any doubts on that, please like ask me that question. Okay. Yeah, like any other question on this home loan interest, repo rates, or like anything on mutual funds, anything like how to build an emergency fund, what should I do, like what should I consider, what should I not consider, any of the question, anywhere, like if you have, please ask me. I mean, if a person takes a loan and in maybe 2 to 3 years lose out on job, he has no choice but to pay the loan. But in rent option, can move out to a cheaper option. See, you can do this same thing, right? See, I'm not defending on making a choice on buying a home. Let's say somebody bought a home and he has to pay the EMI. What you said is correct. Okay, but in that situation, if he having some that kind of financial crisis and he is not having emergency fund, he can definitely move out of that his own home and he can rent it out. Understood? So like with that some money he can live in a rented house, and rest of the money he can pay the EMIs. Okay, but definitely it will not entirely eliminate the risk of paying EMIs. Having an emergency fund of 12 months will definitely help. Second thing is that when you can think that you can move out of that rent and stay in a cheaper option, definitely you can do this as well when you are staying in your own home where you are paying EMIs. Third thing is that you can restructure your home loan, talking to your bank and explaining them the things that what are the situations you are going through, and they will definitely help you in restructuring it. You can at least tell them that I will be paying a little bit for this many months. As soon as I get a job, I will definitely increase my contribution to that. Third thing is that yes, emergency funds I talked about. Yeah, these things you can definitely do. Okay, but if we only think about this like difficult situations, then we are never going to make a buy a home, right? We definitely have to take that very seriously, and always include your home loan EMI or whatever your EMI what you are going to pay regularly in your emergency fund. Emergency fund is a survival to you, and it will definitely give you wings in investment as well, because when you know that you have enough behind you to pay for next 12 months without a job, then definitely you are going to make a very good investment decision as well, because you know you are already covered. right? So emergency fund is a very big topic. Again, we can talk about like dedicated topic about it maybe next week, or if you have some questions on that, definitely we can talk about it again. Okay. So you have like, I hope I gave you the different perspective on that as well, moving out of your rented home or your own home for a cheaper option. That is a good idea. I definitely agree with that. But you can definitely save a lot of money when you buy your home loan earlier, because now the property rates are considerably cheaper when you think about it after 10 years or 15 years, because most of the cities are growing rapidly. Most of the big realty companies are betting very high in like all the metro cities and their what we call that outskirts. So it is going to be expensive moving forward, because real estate is like that. When you buy, it is always expensive. When you are going to sell, it is always cheaper. Okay, so you can make a very ideal a discussion with your family members. You can consult your financial advisors as well to make this decision of buying a home, how to plan your EMIs. Okay, that thing you can do. And initial stages, as far as my case studies and all my clients how they suffered, it is always better to take 30 years as much as possible, then service your EMIs regularly, improve your cash flows. Once that is done, then you can think about investing your extra money rather than investing in the like putting back into the home loan, paying back your home loans. When your cash flows are great and investments are giving you a big corpus to you, then you are already supported with your corpus. You never have to think about paying off your home loans, that will give you a very strong support behind you. So I personally prefer that way. For those people, I know that for them keeping a debt free life is very important. For them, paying off like little by little every month, or once in a 3 months, in a quarter, or in a half yearly, one EMI or two EMI a year will definitely help reduce the burden of this home loan EMIs. Though it will not make a substantial difference when you take into consideration that in 30 years you are maximum paying two times the loan amount. Okay, maximum is two times the loan amount. So it will not make bigger things, but when you start investing instead, it will give you more opportunity to grow in wealth front. Okay, you can definitely build very bigger corpus. Okay, we can definitely, like, if you have questions on this, like I'm there, you have my contacts. You can definitely schedule a call with me. Like I am posting that I am free for 30 minutes once in a while, at least once in a week. You can definitely put a call. It's free of cost. There is no cost for it. You can have a multi-dimensional, multi-directional, multi-perspective discussion with me with that. Okay, it was very unbiased talk with you. You will understand. You can put your own perspectives, your problems, how to tackle that, how to tackle this. We can definitely talk about it. Okay. Okay, with respect to mutual funds, any information about SIF? Yeah, SIFs are very new to this. It is exactly replica of mutual funds, but initial ticket size is 10 lakh rupees. Okay, and currently whatever, like Adel Lewis has come up with the SIF, and it is soon launching it. It's already launched it, but it is not yet available. But if we talk about it, it is going with a hybrid model, not a equity only model. And 25% of total corpus is dedicated for derivatives, not more than that. They cannot leverage your investments, whereas like while trading or derivatives, we actually leverage things, but they have no option to leverage. Maximum what they can take is 25% out of it. There is a chance of outperforming the markets when derivatives and other things are concerned, but there is also the chances that they will just perform as much as the market is performing. And when we had discussion with fund managers who are going to work with SIFs, we had multiple webinars with them. The one thing they clearly said that SIF is something for those people who can take little bit extra risk on their investment, and minimum ticket size is 10 lakh rupees. Okay, and the like nominal rate of return they were emphasizing was 12%. and the cost and everything will remain as same as almost same as mutual funds. Okay, but be it direct, be it regular fund, it will be same as that one, like maximum 2%, 2.1%, like that. Not like PMS or something. There is no additional any other charges on that. Okay, SIF will definitely help you, but what happens is that you are putting a big ticket into one basket. Definitely, if your risk appetite is allowing you to do that, and if you are having a bigger corpus with you, you can definitely leverage that. Okay, because derivative is a part, and it is very well structured, and very expert people are sitting on it, and they are going to do it. Better test it for some time before investing. That is my motive. Like, okay, see it for 6 months, 1 year. Okay, then you can definitely jump on it. How these, like, apart from equities will perform as like same as equity funds. How do this derivative part is performing? That is the game changer, right, in SIF. Otherwise it is normal like other mutual fund. So see on that front, see on that aspect of that SIF. If that derivative is really doing well, then that is worth to investing in that. Otherwise it is not that worth it. Okay, so I'm just waiting for just seeing it's how it is performing in a 1 year basis or 6 months basis. Then I thought of covering it, because even before it launches, if I tell a lot of things, it may not happen. Because even fund managers, when we spoke about it, they are not having that much of great idea about it. They are testing it. How are they planning to do it? And they are expecting only 12% right now. Okay, so that is one thing. Minimum ticket is, yes, it is 10 lakh rupees. You can definitely make SIPs, not the kind of this one. You can definitely increase your investment after 10 lakhs, any amount. But currently the withdrawal is very limited. You can invest as many as times you can, but withdrawal is limited to twice a week. Okay, and it may go twice a month as well, because 10 lakh rupees, they are betting huge on that money, because their money might be locked in derivative tradings, right? They cannot immediately liquidate your money and immediately give. So which is why they may extend that withdrawals or redemption only twice a month. Okay, currently they have told that it is only twice a week, and going forward it may come to twice a month. Okay, but you can invest as much as possible after 10 lakh rupees. Okay, but you cannot redeem it. If you want to redeem, you have to redeem all 10 lakh rupees, not like 1 lakh rupees. Okay, but if your investment is 12 lakh rupees, then you can redeem 2 lakh rupees, but you have to maintain 10 lakh rupees if you want to stay in SIFs. Okay, that is what SIF is currently, what we understand at industry levels. Okay, but it looks like a game changer going forward, definitely. Like it is a product between PMS and mutual funds, and definitely they have a very bigger plan. And currently they are only bringing one plan into market, that is hybrid plan. Okay, there is debt as well in that. If only equity goes beyond 65%, then the taxation will be acted as equities. Otherwise it will be treated as income. So that is also one more concern we raised upon, like how can we educate the investors, if the, like, allocation to equities will come below 65%, then that investor, even if he is making some good returns, he may lose it out of taxes. Understood? So like taxation is a very big thing, because 12.5% tax on a equity funds and 30% tax on a income makes a huge difference, 17.5% out of the gains. So it does not make sense for some people, right? So which is why we are waiting on that. We are see, I personally did not start that topic because of this. I need to understand it properly before I recommend it to somebody else. Yeah, on paper everything looks good. Practically we have to see how it starts to work on. Then I will start talking about it. This is the real information what I have given you. I have sit with 2 to 3 fund managers already through Kotak Connect Plus. We have very rigorous webinars going on with them, and everybody said the same thing. Okay, so currently everybody is very cautious, and they are going with the hybrid model only. So that will be the main debt instruments will be the main investments with them. And they told that they are planning to increase their investments through derivatives and equities to keep it afloat more than 65%, so that the taxation will be treated as equities. Okay, that is the one thing. Yeah, so do you have any questions on this SIS, or any more questions on home loans or anything? Definitely, we can talk about it. Did I miss any comments? Any of the questions? Is there any tool or guidance to assess right price? No, we do not have any tools, but we have to make our own work. Okay, even if there is any tool or any website telling you this is the right amount to pay that, if you go to the field and if you talk about your price, the brokers or the sellers may not agree with that. They will demand what they want. It's just like what you're buying and selling stocks in the market. The person who is ready to sell it for 100 rupees will not tell you that okay, the INAV or the real price is only 90, you give me at 90. They do not. SWP is a good option after a few years. Yes, SWP is always good, but you have to structure it properly. You should always plan your SWP such a way that your corpus is not depleting. Okay, your corpus always should be growing against your SWP. Okay, for example, if your portfolio is growing at 10%, make sure that you do not exceed 5% of your SWP, because 5% is the cushion you need to give to beat the inflation. Otherwise, it is not growing. Okay, so while doing SWP, always put another one more thing to consideration, that what part of investment are you doing SWP in? Is it debt or is it equities? If it is debt, then it is treated as your income, and you should take care of your income status and how much you are going to pay as in taxes in income tax. And if it is equities, no problem. It should not go to try to reduce your short term capital gains rather than going with your debts. Okay, because short term capital gains is better than income, and long term capital gain taxes are better than short term capital gains. So you have to make that plan properly. You should understand which funds are invested very long ago, which funds are invested in a short period of time, which will come under short term, which will go to long term category. You should analyze it. You should see that. Okay, definitely you can do. SW is always a good option. Best SWP with an example, please. Okay, see, I will give you a real example. Yesterday or day before yesterday, I got a call from one entrepreneur, businessman from Odisha, Bhubaneswar. Okay, he is a businessman and he is having some 7 crores invested, surplus amount what he has invested. Okay, now the business is handed over to his son-in-law, and his son-in-law is taking care of the business, and he definitely has the he is acting as a passive business partner in that. Now what he wants to do with the 7 crore is that he wants a steady income for his own daily lifestyle with his wife and his younger daughter. Okay, and he wants some 40% of his money dedicated for any newer opportunities. Okay, for that he has planned not to touch that 40%. Rest of the 60% he wants to start SWP. 60% in the sense, let's take 50%, almost 3 crores, 3.5 crores. He wants to start SWP such a way that he is not depleting it. So he is okay with growing his whole portfolio at a rate of 8 to 10%, and he wants to take only 3 to 4% out of it. Okay, if it's his portfolio is growing at 8% and he is taking only 3% out of it, his portfolio is growing by 5%. Okay, so 3% of 3 crores is almost 9 lakh rupees. Okay, 9 lakh rupees he is only taking every year for only his expenses. Okay, house expenses and his some expenses for his younger daughter. Okay, only that thing. And rest of the 3.5 lakhs he is dedicated for any new opportunities, maybe for his daughter. She is studying MBBS, maybe he is planning to set up a clinic for her or something. That is what he indirectly told me, that any opportunity is coming up, so he has some other plan for that. So it is a right example for you. If you have some big corpus with you, whatever xyz amount, make sure it is growing at 8 to 10% somewhere. Okay, do not take too much risk on that if you are doing SWP and planning for retirement. And then make sure that you are not withdrawing exceedingly without making your portfolio grow or your corpus grow, your money grow. Okay, make at least 50% of it. Like if you are planning to grow your corpus at 10%, do not exceed more than 5 to 6% of SWP. Okay, if you keep it at 4%, it's better. Okay, as year goes by, it grows to be like, it becomes much bigger, then you can plan more. Okay, because in the initial stages, at least at some point of time, you can earn something, right? Definitely you can do that. Okay, SWP, okay, that's done. Then can you explain the tax benefits of home loan? Yeah, now the tax benefits are almost gone, unless and until for old regime people, if you have some 8 lakh rupees, up to 8 lakh rupees as deductions, you can go with the old regime leveraging section 24 for like offsetting your interest paid for home loan 2 lakh rupees up to 2 lakh rupees. If you have a co-borrower as your spouse, then he or she can also use that 2 lakh rupees to offset the like interest paid to the home loan on the front. Other than that, you can only use the principal amount what you have paid under section 80C. Okay, this is the benefit what you are going to get. But definitely what will happen is that indexation benefit has been removed. So whatever you have paid now, like claimed as interest free, okay, that you are going to take as tax in the future when you sell it. Indexation benefits are removed from housing loans. But now, since that many of the people are going with new regime, there is no provision for any tax benefits in housing loan. Okay, it's not like before anymore. Okay, so yeah, do not think too much about taxes right now. Like if you are having too much of deductions up to 8 lakh rupees, then old tax regime will help you and home loan will help you. Otherwise, no. If both spouse and both the spouses are having that home loan things, section 24 will definitely help you, and both of you included should have some 16 lakhs as deductions. Then only it will help you, otherwise it will not help you. Okay, so tax deduction as far as like home loan is considered, it is near to zero. Not everybody can leverage that particular opportunity as tax reducing the tax liability. Definitely go with the new regime, no problem. Madhu, index fund is safe or debt fund for stability? Please explain. So index funds are not safe. Definitely they are not safe. They are completely replicating the index. If it is falling by 1%, it will fall by 1.1% or 1.05%, because there is tracking error in place. Okay, index fund just replicates the index. Debt funds, whereas debt funds does not have any debt, equities with that, right? So it is always safe, but the returns what it gives you is approximately at 5 to 7 percentage, and upon that you have taxation. Okay, tax, for example, if you are making 7% returns in a year and you fall at 30% tax bracket, effectively you are making 4.9% in debt, but it gives you a strong stability. Like if you are having very short term plannings for any purchases or anything else, definitely it will help you giving stability. Okay, but this one, like index funds, definitely no. Like if it is growing, it is growing. If it is falling, it is falling. Last 4 months it has fell by almost 18%. Index funds also fell by 18 to 19%. So it's not like that. Index funds are portrayed to be cost efficient, but they are not. It is not like that. Active funds essentially will help you to reduce the downfall than the index funds. So the topic completely two different things, completely opposite things: equity funds and debt funds. If you want stability, go with debt funds. If you want in equity exposure, go with index funds or active funds. Okay, you can have like both mix of it to have a like proper financial planning on your investments. Okay, yeah, liquid funds, how does it work? What are the returns expected? See, liquid funds, to tell you, it is just like investing in FDs or bonds, government bonds. Okay, to say that liquid funds mostly invest in bonds, okay, like corporate bonds, which are very near to expire or mature, maybe 3 months or 6 months, ultra short duration bonds, funds or something like that. They do not expose the investment to the equity sector, so your money is not at risk. Okay, it is only leveraging smaller duration, low risk things like treasury bills, government bonds or something. So you do not have any risk. You will get almost a guaranteed returns of 5 to 7% each. What you can expect, sometimes more than 7, 8, 8.5% as well. Okay, but in equity funds, when you go with arbitrage or something, that is an opportunity when the market is having some differences in price. Okay, when there is a misprice within the same product, they buy here and they sell there, or they sell there and they buy here. Okay, so liquid funds and this are completely different. The expectation, what you can expect from liquid funds is almost 5 to 7% at max, and use liquid funds only for your emergency funds and short term plannings. Okay, only for that. Other than that, wealth creation, no, you cannot do any wealth creation in like liquid funds. You cannot do that. Okay, but for stability, for having some cushion within your equity portfolio, definitely you can go with that. There are much other like better opportunities as well, but it depends on person's risk profile, how much he is willing to take the risk, and what is the duration, what is the plans, what is the goals, how much liquidity does he want in his financial situations, or we can say what is the cash flow, what is the stability of family finances. Okay, what are the immediate liabilities they have. So many things we need to consider before recommending a exact product for a portfolio, right? Better FD or liquid funds? See, FDs are better, but they come with lock-ins. Okay, there is a lock-in period for FDs. If you are going with 1 year, your interest rate is less, but 1 year you have to lock your funds there, right? Whereas in liquid funds, hardly exit loads are capped at 15 days or 30 days maximum. Okay, but FDs may give you little more returns when the repo rates are high. Okay, when repo rates are high, if you go for 6 months back in the December or January, the some of the nationalized banks were giving 7.65, 7.8 as well. That was the highest returns, but you have to lock your funds there for 1 year, 3 year or 5 year. But whereas in liquid funds, you do not have lock-ins, such lock-ins. It's highly liquid. Okay, but the returns might be little lower, 6 to 7, 8%, like that. Six somewhere, sometimes you get only 6%, sometimes you may get 7%, like that, right? But when repo rates are down, the current situation, maybe now banks are offering only 6.5 or 6.7% after 1% reduction in repo rates. Now liquid funds or ultra short duration funds might work well for you. They may deliver you somewhere 6.5, 7.5, 8%, right? That thing you can definitely do. Okay, and definitely I'm already shooting a video on this low risk funds which may deliver you better returns than FD at current scenario, but the time duration is capped at 2, 3, 4 years, not less than that. Okay, which may give you approximately 7 to 10% in long run, giving you equity kind of taxation. I'm bringing that video as soon as possible. I'm working on that. Okay, so I will not disclose that thing right now, but you will definitely see it in the video. Okay, you will definitely get it. In this new AI era, what is your thought on the field of study that people should focus on? Many people are confused in choosing their career. Your perspective on that, please. Yeah, see, there is revolution every once in a 10 year or 15 years. Because when we were studying, there was a lot of euphoria about computer science and everything, and everyone was thinking that everybody is going to lose job because computers are coming and it will replace everyone. But it is not like that. Okay, now AI is coming and AI is revolutionizing the way we work. We are getting much smarter with external help now, right? So it will definitely increase employability as well, because some people may not be so much intelligent to work on, right? uh, for them AI will definitely give that extra intelligence, right? So the focus should be a hybrid focus, like you go with your core subjects, you go with your core education, along with that go with this AI and everything. Because when we were studying, you may relate to it. When we were studying, either it is commerce, either it is science, either it is engineering, whatever it is, we used to do a crash course in computers, right? Because you want that additional skills with us. Either it is graphic designing, either it is animation, or it is some creative studies, or computers, like that. So with your core studies, with whatever you are studying, if you put something AI or something like what is creating buzz in the market right now, and you see as a bigger future, definitely add it as a crash course with you, leverage it, and move forward. And when you move during this transition phase, definitely you will understand while you work or while you study, you will definitely understand where this industry is heading, right? And definitely it will integrate with your career, it will integrate with your studies, and you will find a path where to move on. Definitely you will get a right path going forward. But if you sit and think that this is only the way, then it will not work, because this is evolving industry. Every industry is evolving, everyone is making use of AI, everyone is talking about AI, right? But without humans, AI is nothing, because human people are putting that intelligence to the AI, right? So you can do that, integrate some of the skills, external skills, like AI with your core studies. Definitely it will help you. What is one money saving habit that's always worked for you? One money saving habit is that cut your unnecessary expenses, okay? Because everything lures you to do, because you may see somebody doing great reels in Instagram with new clothes, you may see somebody wearing some white Nike shoes, or you may see somebody using new earrings or something, that will lure you to make more expenses out of your pockets, which you could have saved. Okay, because there is real life one side and real life on the other. Real life is where you are going to suffer, real life is where you are going to smile. So you need to decide which one you want, right? Spend on very essential things, keep your lifestyles very afloat on the top side, enjoy it, but do not overspend on things which are not giving value to your wealth or yourself down the line after 10-15 years. If you think that this is what the money you need, then start investing for it, instead of spending for the current or right now thing, right? Like to impress somebody, to or show off things. Do not do that. Have a very conscious decision on it, invest what is required for you, what you can do. Okay, then that will work for you very well, I think. Okay. Yeah, so that was a very good time today. If you have any questions, please shoot it out. We'll try to answer. Otherwise, we can just wrap it up. It's almost 1 hour right now. We are talking about it. Next week we will definitely come either Saturday or Sunday. Okay, keep your questions, any topics, no problem. I will bring an agenda any other topic, maybe some like ongoing topic in the market, or some other topic which I think I need to give you some information on. But you are always welcome to put questions on any of the topic you think you need some answers about, my perspective on it, and how we can evolve, or how we can make our own financials better. Okay, so if you have any questions, yeah, thank you, enjoyed the session. Thank you so much, Madhu. Thank you so much, Blitz YouTube. Please comment your name, Blitz YouTube. I do not know your name. Please, next time I do not address you like Blitz YouTube, I will call your name. So yeah, thank you so much. I do enjoyed very creative and very genuine questions from your ends. Definitely thank you to you, Sridhar Shetty. Then Sharanya, thank you so much for attending and asking your valuable questions, because it has helped other people as well. Thank you so much on that. Amit ji, thank you so much. Yeah, thank you so much for all your questions. It has given like brush up to me as well, to other people, other viewers as well. Thank you so much. Okay, I will wrap it down. Thank you so much. We'll meet you on next week. Okay, I will tell you the timings, maybe like weekends most of the time. Okay, you can text me your questions well ahead if you want. Okay, if you want a deeper researched answer, or you can make use of my free window of calling. Like occasionally I put 30 minutes of free time. You can definitely connect me through call or message, or any way you feel which is comfortable to you. We can connect and we can talk. Okay, thank you so much. Have a nice weekend. Take care. Bye bye. Well done. Thank you so much. Let's end this.